Whenever war starts, many things become uncertain. Stock market falls, currencies become unstable, but one thing often goes up: gold prices. Why does this happen? Let's understand it in a very simple way. During war, people become worried about their money. They feel that many investments are risky. So investors start moving their money into something they believe is safe. For a very long time, gold has been seen as a safe place to store wealth. That is why many people start buying gold during uncertain times. The price of anything increases when more people want to buy it. During war, many investors rush to buy gold. Because of this high demand, gold prices usually go up. It is a simple rule of the market. More demand means higher price. War creates a lot of fear. People worry about the economy. They worry about inflation. They worry about losing money in risky investments. Because of this fear, they prepare something stable like gold. And again, this increases demand. Currencies can be printed in large amounts, but gold is different. Gold is limited in supply. Because it is rare, many people trust it more during uncertain times. That is another reason investors move toward gold during war. Gold prices do not always go up forever. Sometimes prices rise quickly when the war begins. Later, when the situation becomes more stable, prices can also slow down or fall. So, in a simple words, gold prices rise during war because people want safer investments. Many investors start buying gold. Fear increases demand. Gold is limited and trusted. That is why gold often becomes very important during uncertain times. If you want to learn more about money, investing, and financial knowledge, subscribe to this channel because understanding money is one of the most important skills in life.